Hello everybody, this is Jonathan Tran with Paramount Financial. We're back again with finance in 5 to 10 minutes. In today's topic, we're going to piggyback off of our previous show. We talked about life insurance in general. And one of the things that most common life insurance you see out there is what they call as term life insurance. Or in other words, just think about term, temporary, or term for a certain term of years before the policy doesn't work anymore, right? So very commonly you'll see people buy like term 10 years, 15 years, 20 years, 25 years, 30 years. So what that means is that when you buy this term life insurance, you will have a death benefit or a amount of money that you purchase. Say, for example, it's $500,000. If you were to pass away, that $500,000 would be paid to you, your family, tax-free, means no taxes have to be paid to your family members, and they could use that to, move on with life, take care of like loss of income from you, right? So term insurance is a very good type of life insurance, very affordable. The reason why it's affordable is because when you think about term, there's no cash value built up in it. So basically, you're just paying strictly for life insurance, and if you pass away within the certain time frame that you buy, example 20 years, if you die within 20 years, they will pay the benefit. If you don't die within 20 years, then on the 21st year, your policy will have an option where you could renew it annually, but the rate will be determined based on your age. And many times the rate goes up a lot, and many people just let it go because it's too expensive. So in case, why will we pay that if it gets very expensive? Like what if you were, on your deathbed that last year and your policy was about to expire, then yeah, it may make sense for you to continue purchasing the life insurance because you may have a need for it, right? But most of the time, once you buy that term, the term is over. You're just going to let it go because you may just need that life insurance for a short time. Maybe you have obligations or responsibilities such as your kids going to school, or you have a mortgage, you have debt. These things that are going to go away someday, right? Your kids may grow up, you don't need life insurance anymore, or maybe you paid off your home, so the need for life insurance may go down, and so a term life insurance may be very appropriate for you to buy something for very cheap, because term life insurance usually is a lot cheaper than buying a permanent policy which will last your lifetime, right? Now, term insurance may sound kind of boring. Yeah, it is. You pass away, they pay. But nowadays, a lot of life insurance companies, or some of them out there, may offer like a term life insurance that have something called living benefits. The living benefits, you can use it while you're still alive. So a lot of people, when they buy life insurance, they always think, hey, you know what, I don't want to buy it because I can't use it for myself. It's just for my family members. And by the time I pass away, I put all this money into it and I never got to use it. So that's why they come out with these newer policies that sometimes have living benefits in it, and then you can use these benefits while you're still alive. Well, what type of benefits would that be? It could be a critical illness benefit. Critical illness means that if you are critically ill where you may pass away within 12 months, the life insurance company will allow you to have access to the death benefit before you pass away. Another type is terminal illness, where you are going to pass away very soon and you need money from the policy. You can use the policy as well. And finally, a chronic illness benefit, where if you're chronically ill, permanent illness, or a disability, you can use the death benefit ahead of time for that chronic sickness, right? So you have many different living benefits you can use it for besides just passing away. And sometimes that makes us feel like, hey, that's a lot more flexible than just having a life insurance that only pays out when you pass away. So how do they really work? So I'm going to look at some case studies here. The first one is, let's talk about the chronic illness, okay? So in this case study here, this person, they bought life insurance when they were 35 years old, and they bought a $300,000 policy. And what happened is that she got into a car accident, right? And the car accident caused her to be temporarily disabled. So in that case, they say that she could get a benefit of about $24,000 a year until she recovered. So that means that every year, life insurance company is going to take out of that $300,000, $24,000. to pay for her temporary disability, or it could be permanent. Every year, as long as she's certified with a doctor her condition, they will continue to pay that out to her until she recovered or until the benefit was no more. And so that is a chronic illness. The next one is a critical illness. So say if you have a heart attack, for example, this lady, she was 40 years old and she purchased a policy for $250,000, paid about $45. And what happened was she had a heart attack at 48 years old, and they said this was very severe. So it was a critical illness. She could have died, or her life would be endangered, but she's not quite dying yet. They would pay her a total of 90% or less. And in this case, they paid her $150,000 out of that $250,000 for that condition. So as you can see, you really don't know what you're going to get until something happens, but at least you know when something does happen, there's a benefit to be paid out. And then the last type of illness is a terminal illness. Say if you had this individual, he's 45 years old, he bought a $500,000 policy, and he had a terminal illness. He found out that he had cancer, and he was going to pass away within 12 months or less. Very sad. And so because of the severity of his condition and that he was terminal, they agreed to pay him up to $462,000 out of that $500,000 so that they could pay for medical costs or whatever it is to help them financially during the time of hardship, right? And so these are some things that could be tagged on with your term life insurance as an additional benefit. Now, of course, if you buy things with additional benefits of any kind, it's going to cost you a little bit more money. So you have to make sure that, hey, is this additional cost, is it right for my situation? Another thing about term that you have to know is that even though it doesn't have any cash value, you can convert the policy to a permanent policy. Now, depending on the company you purchase, some companies allow you to do a conversion within the first couple of years to a permanent policy. Some let you convert all the way up into the maturity date. So say if you bought a 20-year plan and you wanted to convert, some companies will allow you to go up to the 20th year and you can convert, right? And why is conversion important? Well, when we buy life insurance, when we're still healthy or younger, we reserve the health, right? So when you convert, you don't have to take a medical again. You just pay based on your age. So of course you're going to pay a higher premium based on your age, but you will retain your rating at whatever you purchased the term at the time that you purchased the term. So if your health was a very great rating, and then all of a sudden, a few years later, your health condition deteriorated severely and you want to convert to a permanent policy, then you're able to do so without doing a medical, right? So for example, I know a person who I worked with before, he told me that he bought life insurance. He was able to buy life insurance even though he had a heart attack. And I told him, how did you do that? And what he did was he had a term life insurance policy that he bought when he was healthy. And when he had that heart attack, he was afraid that, hey, even though I have this heart attack, I may live longer, or I may keep on living on and beyond the term policy that I have. So I want to convert this to a permanent policy just in case I live longer even though I have this heart condition. So term life insurance, just remember, most of the time very cheap, high benefit, but it only lasts a couple number of years before it expires or you have to renew it. The price does go up after the term. There's no cash value. You can add on living benefits and you can convert it, right? So I hope that's very helpful for you guys to learn more about term life insurance. Please follow us in the links below and follow the other link for the other series in life insurance, okay? Thank you very much, and I'll see you guys again. Bye-bye.